Alright, good afternoon everyone. Today is Monday, the 8th day of April, 2013. We achieved our goal again today. We had 2 points ES equivalent in one trade. It took us 3 minutes, one trade. It was a gold trade. As soon as I sat down at my desk, I saw it, I put it on, I took profit. So these are the minutes to 2 points equivalent ES so far for the month of April. Our totals for the day, we were plus 15 on gold, we were break even on crude, and we were plus 15 on the Russell. Okay, we had a bunch of trades today. The crude oil was back and forth all day. It was difficult today with the crude. We ended up having 11 trades total this morning. We were plus $300 a contract on 11 trades total. So far for the month of April, we are plus $2,080 per contract. If you assume an $8 commission, we've had 71 trades, which is a lot of trading. But if you assume an $8 commission per trade, per turn, per contract, we are still plus $1,512 per contract for the month of April so far. All right, so we are well on our way to another record month in the live trading room. All right. So let's just get started with the trades, all right? We'll jump right in there. There's one right here. As a matter of fact, for those of you guys who are partners or on the free trial, you may recognize this trend line that I'm drawing here, the divergence that's down here, the close above the trend line that's right there. All right, I'll start out with crude oil. I took a bunch of trades on crude this morning. I think it was crude I took a bunch of trades on. Yeah, I took a bunch of trades on crude. To end up break even on crude. Crude was it was okay in the pre-market. It did okay in the pre-market, but once the markets opened up, I missed all the good trades, and I took the trades that didn't have much follow-through. All right, for the most part. Well, let's see. I had one losing trade, 2 break-even trades, 1 trade that was good for 1 tick, and 1 winning trade. So, but we'll start off over here. Okay, we had a bullish cross to test to the BBC with an up close. I got long there. And it pulled back and stopped me out. It actually slipped me on the stop out. I was minus 9 ticks at that point. Okay, I missed this trade over here. It was a very nice trade right here, a short that went down, was followed up by a bounce off the BBC right here, and it went down very well. There was another one over here, this down closed right in here, dropped down about 8 or 9 ticks before it moved back up. Over here there was a long trade, a test to the BBC after the bullish cross. Bullish divergence, long trade right in there, good for about 10, 12 ticks. Another one right here that was good for about 20 ticks, that I missed all of that. There was one right here that I actually took, and it didn't have any follow through. I moved my stop to break even. Once I had 4 ticks profit in it, I moved my stop to break even, and it came back and stopped me out at break even. We had a bearish cross, a pull away from the BBC right in here, a test of the BBC with a down close right there. There was an opportunity to short right there for plus 10 ticks. Now, there was a spot. Where the heck was that spot? Am I coming up to it, or did I miss it? It was over here. Over here. I didn't trade in this spot, but there was a spot right here where if you traded every trade right here, right at the beginning of the day, then there was a trade right here on the down close that stopped out. And at that point, you stopped out on that, maybe waiting until it put in a lower swing. Would have been a good thing right there before you got back into it, but it pulled back up and it gave a gravestone doji right up here. Still tradable. I mean, it's still a trade. If you took that, you stopped out. And then there was this one right here, and if you took that with me, you stopped out. Okay, so you had 3 losing trades in a row, then 1, 2, 3, 4 winning trades in a row. A break even, another win, another win, another win. Actually, this was no trade here. Another win, another win. So there's no reason to be way down on crude oil today. If you got all 3 of these losing trades right here, that stinks, but that happens. It was followed up by a whole bunch of winning trades. 1, 2, 3, 4, and a break even. That actually could have been taken as a win, a 4 or 5 tick win. 6, 7, 8, 9 winning trades. So you start off with 3 losing trades, and you follow up with roughly 9 losing trades, something like that. and that was just that part of it. There were more trades in here that I missed. I did take a trade over here. I got to break even on that one again. This one right here, if you'd have taken that trade, it would have been a losing trade. There was a trade right in here that I missed. That was a nice win. And that pretty much wrapped up the morning session right there. But granted, if you started right at the beginning of the day and you took just the first few trades, you were down 24 ticks right here, right at the beginning of the day. If you took the few trades after that, you were back to break even. If you kept trading, you were up on the day. So it's not always winning, okay? It's not always winning. It's how you handle the losing. That's important. Now let's jump off of crude. We ended flat on the crude. All those trades that we took, I think we took 6 trades. We ended up flat on the crude. All right. On the Russell, I have 2 trades that we took on the Russell here. All right. Yeah, let me just scroll back. Okay. Now, we took 2 trades, but that doesn't mean there were only 2 trades, okay? There was an opportunity to short right in here on the down close right here. I missed that. There was an opportunity to short on a down close below the trend line here. Actually, the place to short was up here. I missed it, and I grabbed the wrong short right here. But I ended up taking, I think, 13 ticks profit on that one. All right, the next one that I took was over here. I took a short trade right over here, and I think I took two ticks profit on that one. That's what put me at plus 15 ticks on the Russell. But there was a 1, 2, there was no trade here. 3, that would have been really fast. 4, this would have stopped you out. 5, 6. 6 trades available on the Russell this morning. Well, 6 winning trades with 2 losing trades available on the Russell this morning. Okay, we ended the Russell plus 15 ticks on 2 trades. Let's go to gold. Okay, on the gold, we had a few trades on gold as well. We missed a ton. We missed a bunch of trades on gold. But we had 3 trades. Okay, we started right out. This was our first trade of the morning. We missed this one right here. It was a little bit pre-market. But we jumped in as soon as I sat down at my desk this morning to get the morning session going. I saw we tested the BBC right here. We got an up close right at the BBC. We had bullish divergence, nice strong slope. Everything was looking good. I jumped in. Now, I didn't get in right at the up close on this bar. I took 1 tick more. I got in at 75.3 on that, I believe. And I took profit up here at 76.3. And that was enough to make my 2-point target for the day. It took 3 minutes. The actual duration from time I sat down to yeah, that's true, Anthony. I'll read that all out in a minute. The actual duration from the time I sat down to the time that the trade finished was probably less than a minute. But anyway, it was 9:33 when I got out of the trade. I missed the next trade. I took this one over here. I took a couple ticks profit on that, and there was one. I messed this trade up. I didn't just miss it. I messed it up. I got in at the wrong time. I got in on the up close of this bar, and there was red on the cycle. I took a 2-tick stop out right over here, and then this trade ended up working out. Now, the place to get long would have been the up close of this bar right here, this blue bar, but I had gotten out while that bar was still being created down here. So I missed that opportunity right there. I actually made a mistake on that opportunity right there. And right over here, there was a short opportunity here on the down close below that trend line. There was no down close below the trend line over here by the time we lost the divergence, so there was no opportunity. Over here, there was nothing. Over here, these would have been really hard to get into right here. There was one of the partners in the live trading room had asked why we didn't short these, and there wasn't much for divergence here when it was happening. Okay, you could have put a sell stop on in there and gotten into that one or that one, both for the move down. The one that I got into was the down close below this trend line after I had a little deeper pullback and gave a little bit more divergence down here on the bottom. I got short there. I took profit there. It went all the way down to there. That was pretty much it. You can see there were a couple more trades on the long side here during the break, but I did not take them. We ended the morning plus 15 on gold. All right. Soybeans. Let's just jump over to the soybeans for a minute. I didn't take any trades on the soybeans, and I really didn't look at them all that much. But the soybean markets opened on their new schedule today. They opened an hour earlier than normal, I think, was the new schedule. They were to open up right in here at 9:30 Eastern. There was divergence with the down close below the trend line. There would have been an opportunity to short the beans right there. It flipped around and went long right over here. This is where you would have been going long, right there. Okay, it didn't put in any higher swings, didn't continue the trend. Turned around again, went short, but because there was blue on the cycle, you would have been going short on this bar right here, 72.78. All right, so the soybeans had about 3 trades this morning. We didn't even look at it. The NQ we looked at just a little bit. The ES was stuck at the weekly trading zone most of the morning. So I wasn't terribly interested in trading the indexes until the Russell really started moving. I wasn't terribly interested in trading the indexes, and the NQ is one of those indexes. It had some nice moves, it had some not so nice moves today. Okay, but because the ES was stuck at the zone, I really didn't like anything with the indexes. And for that reason, I'm just going to skip right over the ES. I'm going to jump over here to the yen. Now, I hadn't even had a yen chart up this morning, and I hadn't noticed the yen trade this morning. But one of our partners, Lynn, he had told me. Let me just see something. Is he in here now? Nope. He had told me take a look at the yen, and this was a natural gas chart. And I just flipped it to a yen chart because the beauty of all this is that it doesn't matter what the symbol is. The indicators are the same. The setup is the same. Everything is the same. So you can have the same set of indicators on every single chart and look for the same trade setup on every single chart. At the time, he said look at the yen, and I came over and looked at it, and I had mistakenly drawn my trend line the wrong way, which made the entry down here. But the actual entry was right here on the down close of this bar right here. The down close of that bar was at 37. So you could have entered there at 37. It pulled all the way back up to 39. You could have entered at 37 for the move down. I know he had gotten short at 34, waited for the down close here, or maybe the down close below the MA1. But he got short at 34, and he was looking for 20 ticks profit. It actually went 24 ticks. Since then, it got pretty choppy in here after that. It didn't give any opportunities in the live trading room. But after the live trading room, there was another opportunity right in here to short it. Okay. I believe he was +6 on euro, +6 on yen, and +53 on a combo of the crude and the gold. I think, Anthony, something like that, right, Frank? Something like that. Anyway. Bullish cross in here. If you wanted to trade the yen, you needed an up close. The up close was right here with a bullish divergence, so there was an opportunity to get long on the yen there as well. All right. On the euro, I didn't look too much at the euro this morning because we started looking at the yen, but I did draw in this one spot right here. There was a long trade right here, and I didn't want to take it because we weren't coming off of higher swings. We're kind of in a choppy area right here. It did give 5 or 6 ticks, but not much more than that. You mean Lynn's rule, Andrew? I have no idea. He left right after he did that. He left. He finished his day and was on his way. Now, 20 ticks on the yen is the same as 5 points ES. Okay. Hey, that was a pretty good memory there, huh, Frank? +53 on a combination of crude and gold, and actually, it wasn't a very good memory. And +4 on the euro, +6 on the yen. But that's where you are now, or that's where you were then? I thought back then you had a slightly different number. But anyway, that is it, guys. Those are the numbers. And if you have not taken a free trial with us, you should go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you get everything you see here. You get to sit in our live trading room for 5 business days. For 5 business days and watch us trade. And you get to You get to download the platform, download the indicators, and participate with us in everything that we do. If you are on the free trial and you have not downloaded the platform and you have not downloaded the indicators, you're doing yourself a disservice. You need to do that. It's part of the free trial. You need to get experience with the indicators, with the platform, with the DOM, and everything else. All right. I do. That's a good point. Hang on. Let me.
By using consistent four-range bars, you seem to be discounting the dollar value of the tick in different markets, as well as the difference in the volatility in the various markets. Do you find that the consistent is worth the simplification of keeping all the charts at 4 ticks? Consistency. Thank you, BJ. Do you find that the consistency is worth that simplification of keeping all of the charts at 4 ticks?
Absolutely.
Question from
Yeah.
BJ.
That's a good question. And absolutely, I do. Keeping all the charts uniform makes all the setups exactly the same, all the risk exactly the same, all the indicators the same. You know, I could take, let's take, for instance, this yen chart. Okay. If I just, let's not do the yen chart. Let's do the NQ chart. If I take everything off the NQ chart, all the drawing objects off the NQ chart, hang on, there's a lot of them, so it's trying to highlight them all right now. There you go. If I take all the drawing objects off the NQ chart and we blow it up, now it's the NQ right here. I can just flip it to an ES. I think. There we go. I can flip it to the ES, and it's got the exact same trade setups. Indicators don't matter. I can flip it to a YM, which I don't typically have in here anymore because I have too many other charts. And once it populates here, it'll be the exact same setup. Exact same indicators. I could care less what the symbol is. It doesn't matter. It's always the same. You know, let's do something I don't normally do, like the British pound. We'll just randomly choose the 6B. Now, give me some random symbol that's covered, and I'll show you the same stuff working over and over again, regardless of what the market is. I mean, anybody just type in a symbol.
and here's the thing, because you've already, any chart that you potentially, or instrument that you may potentially trade, you've already brought up a DOM for that market, and you've set your brackets in the DOM. You know, what your stop's going to do. So it's like for me, when someone at the end of the radio show, like on Friday, when people, and I said, all right, guys, if you point out a market, I'll trade it. They go, I think the first one they called out was, well, the yen's setting up. So I went to the yen. I popped open a DOM knowing that my brackets were already set. So when I entered that order, I would automatically have a stop in place. And that's what you'll want to do, is go through each market, bring up a DOM, set your bracket, okay? Once you get that bracket set, and then you save that layout, then it's going to be that way every time you open up your charts. So that's just one less thing you have to think about in the middle of a trade is, oh man, I got to get my stop out there. The bracket does it for you automatically.
Yep. I use the same risk on every chart. You know, the same setup, the same risk, the same everything on every single chart, regardless of what the market is. I mean, right here I'm just drawing the trend lines and possible entries here. Not all of them are winners. This one right here would have been a losing trade right there. But the rest of them would have been winning trades. Okay, and that's the ZB. That's the ZB. I just did the 6B a second ago, JM. Okay. It's always tick risk. I'm using a 4-tick range chart, so I use 2 bars risk. So if you know 4-tick range was too fast for you, and you wanted to go with, say, 10-tick range, you should use 20 ticks risk. 2 bars risk, because the bars are defined. Okay? You know how big every single bar is going to be before the bar is created. I mean, the range bars give you so much more information than, say, a minute bar or any other bar, for that matter. They give you so much more information because, like the current bar that's building right here, this is the ZB. Let's see, it's got a low of 47.19. I know that if this low stays in place, it can only have a high of 47.23. So let's say I think it's going to go up from here, and I want to buy on an up close of this bar. Okay? I want to see an up close of this bar, and if this bar closes up, I'm going to go long. I know that if the bottom is going to be 47.19, like it is right here, it's going to have a high. It has to have a high of 47.23. So I can, if I wanted to risk an extra tick, I could put a buy stop in at 47.24. And if it was going to keep going up, it'd fill me at 47.24 on the up close. I'd give up one tick, and I'd be in the trade for sure. Now, the other thing you can do is just wait for it. You can just have your finger on the trigger, waiting for the thing to give you the up close. Now, if this bar drops down one more tick, like let's see, right now, has it gone the full range? It hasn't. It's got a high of 47.22, so it could go down one more tick. All right, the full range of this bar is 4 ticks. Right now, it's got a high of 22, so it could go down to 18. But if the bottom stays in place, it's going to have an up close at 47.23. Okay, you have so much more information with this. Yeah, I can add that on there.
Don asked, can we add dynamic support and resistance to this chart? Yes. And by the way, the video I made on Friday where we were trading the yen, I had the dynamic support and resistance on that chart, and we had an opportunity to trade against broken dynamic support, and I point out in the video why that is one of my favorite trade setups. So if you get a chance, be sure and watch that video. The screen and the audio is a tad out of sync because, once again, I forgot to put on the other headset, and so I had to spend most of my Sunday afternoon peeling the audio track out of the podcast and inserting it into the video on a separate track, and the only how-to video I could find on how to do that out on YouTube was in Espanol, so that didn't help me very much. I finally just figured it out. Punch enough buttons, finally something will work. That's the thing with a Windows PC. If you just click enough buttons, finally something will work. Not true on a Mac. Nope.
All right.
I'm sorry, you're in the middle of answering a question.
I just added the dynamic SR to it, and Don had asked if we could add the dynamic SR.
It's as though price bounces back and forth between the two.
It is. It's as though these support and resistance areas are just areas where there's a whole bunch of sellers or a whole bunch of buyers. And
now, guys, this is dynamic. This is an algorithm working in real time. Unlike the weekly trading zones, which are fixed support and resistance. Those are cast in stone before the market opens on Monday, sent to the partners, and they remain the same the entire week. Dynamic support and resistance is constantly changing. And when those numbers play off of the fixed support and resistance, it can make for a great trade. And as you'll see on that video from Friday, when you get an opportunity to trade short against broken dynamic support, wow, that is a high probability setup. We had the BBC, we had the broken dynamic support, we had everything. It was, well, you'll see.
Does anybody want to look at any other markets while we're here? I'm
Anybody?
happy to just flip it out. Just type in a market you want to look at. Feeder cattle. Hogtails.
Hogtails. Pig's feet.
Pig's feet.
Jerry, I know that you would like to see us make an auto trading thing out of this, but those auto trading programs are inherently risky and dangerous. And quite frankly, I've never seen results from one that was consistent enough that I would want to go down that path. I mean, if you're going to sit there and watch it, then it probably is okay, but the kind where you just turn it on and walk away, you need to have a really deep account, and you need to trade in very small size, and even then, I would be restless. So, chances of us ever doing that with this, not that Michael couldn't code it, I just don't think we're led to do that. So, unless you've had some epiphany, Michael, that not sure.
With this, not with this. Not with this. Calculating the trend lines is really a difficult thing to do. calculating the thing that automatically puts the trend lines on. What the heck did I call that thing? I did try to make one of those. Here it is, CFTL. Let me see if that draws them the right way. You see all those trend lines? It's not an easy thing to do. I would rather everybody understand it and draw their own trend lines. At some point you don't really even need to draw the trend lines. You can eyeball them. When you understand what's actually happening, you can just.
Yeah, the trend line is just a visual aid. I mean,
It is.
It's not anything, or it's just to help you see it. Once you get used to seeing it, you don't even really have to draw it, but you still can, of course.
Yeah.
All right, Michael.
All right.
Anything else before we roll out of here?
Nope. I think I'm gonna flip this back to an NQ chart, and I think we've covered all the questions. All right. If you haven't taken the free trial and you want to take the free trial, go to www.cfrn.net/apply, sign up for the free trial. If you have taken the free trial and you want to become a partner, send us an email at support@cfrn.net, and we will get back to you with what it takes as quickly as possible. All right? That's it. I'm going to wrap up the recording.